Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope all of you had a very nice day of trading today. And in today's price action, guys, well, the market's hitting brand new all-time highs as we continue removing uncertainty catalysts one by one. This was pretty much the main thing that we were looking at, guys, in the last 2 weeks was all of the uncertainty catalysts. Last week, we got an everything in the kitchen sink week. We got so much economic data, PCE inflation numbers, GDP, a couple jobs reports, and all of the big tech earnings releases. And for the most part, everything went pretty well. And this week, of course, we had two very major uncertainty catalysts, which were the presidential election on Tuesday, and of course, today, the meeting with Jerome Powell. So now, guys, I am happy to say that we are through most of all the uncertainty catalysts pretty much through the end of the year. So it should be smooth sailing moving forward for the markets. We've gotten through them. So congratulations to all of us for staying alive through all of that volatility. Now, in today's price action, guys, we hit new all-time highs. The SPY and the QQQ did very well. And Jerome Powell in the meeting was fairly nice to us, dropping interest rates by another 0.25%. So in today's video, guys, quite simply, we're going to go over a few things together. Number one, do a quick little recap of what Jerome Powell had to say in today's interest rate decision meeting. Number two, I have a couple earnings prepared for you guys, and those are going to be, we're going to cover Block, so Square. We're also going to cover the Trade Desk. And lastly, we're going to cover AirBNB as well. I know there was a ton of other ones. As I said, I'll probably be covering a few more into tomorrow's sessions, some of the ones that we haven't had time to cover this week. So we're going to cover those earnings in a few short minutes. Thereafter, we're going to do our major technical analysis rundown of our major stock market indexes, and then our big tech names, and see how we are shaping up, whether or not there's still some juicy buying opportunities either in the indexes or in the big tech names specifically. No portfolio update for today, guys. I will once again save that for tomorrow. We'll do a full portfolio recap, what I'm holding into next week, how the trades went for this week as well. Quick little hint, they went extremely well. We made a ton of money, both myself included and our Discord members. So it's been a fairly good week. Looking forward to giving you guys a massive update tomorrow. So without further ado, guys, let's jump right into today's action. So the SPY up 0.77, QQQ up 1.57, and the heat map once again remains some outperformance from big tech. I was talking about this as of last week after the earnings and coming into this week's elections and FOMC meeting as well. I still believe, guys, that for the next at least 1 to 2 months, the easiest trade is going to remain the Magnificent Seven. That is because we still have a lot of uncertainty factors in the economy right now, in terms of jobs, in terms of market output, in terms of GDP and things like that, in terms of whether or not inflation is going to be sticky or not. So all of those things play into various different sectors of the economy. They play into financials, they play into healthcare, they play into the bottom half of the market that are sensitive to moves in the 10 and 20-year yields. Which one of those groups is not that sensitive to all of that data? Well, pretty much it is big tech and the Mag 7 that are flush with cash, do not need to borrow any money, and are expanding excessively fast due to their new AI and productivity augmentations in their businesses. So I still do believe the easiest trade right now, guys, is going to be the Mag 7. And there's a few names that are not at the all-time highs just yet, which are going to be some very nice follow-up trades in the next few months. And we've talked about those. Quick little hint, it is Microsoft and Google. So moving on into our group sector analysis, which I just closed, clicked on the wrong button. My bad, let me open it back up. So if you take a look at the one-day relative here, you'll see that most of the sectors in the S&P were up, except for industrials and financials. Financials had one of their best days in the last few years yesterday, so normal for them to have a little bit of a pullback. Where do we stand on the 1 week at the all-time highs? Well, everything in the green except for the utilities sector, guys. And the utilities sector has been one that's been impacted by the rise in long-term yields, and I do expect that to continue. Real estate, utilities, defensives, and healthcare could be a little bit sidelined while we have this increase in the 10 and 20-year yields. So before we get into more technicals, guys, let us jump over exactly what Jerome Powell had to say, which led to the markets, well, not falling off a cliff, not rallying much after Jerome Powell's speech, pretty much just doing a whole lot of nothing in the end of the afternoon. Let's have a look here, shall we? So Fed meeting recap, Powell feeling good about the economy and says Trump can't legally fire him. So Jerome Powell, quick little recap here, guys. The reason that the markets did not move very much is that pretty much everything came in line with the expectations. Now, there's going to be a big focus on the Fed's guidance for December and especially moving forward, whether or not they were going to continue the pace of rate cuts, because we know the data has been sufficiently good. So the Fed potentially might be wanting to keep the rates higher for longer. And we were trying to get a sense of whether or not Jerome Powell was going to commit to saying anything about the December meeting or moving forward. And he did not. He answered the questions, but he avoided any significant guidance moving forward and remained, as he has been over the last 3-4 meetings, he said that he will remain data dependent. So let's move into the headlines here. Federal Reserve trimmed the interest rates by 1/4 point down to 4.5 to 4.75 range. Jerome Powell said he was feeling good about the economy. U.S. fiscal policy. Now, he did touch on the debt. Usually Jerome Powell does not comment on fiscal policy. It is not the Federal Reserve's job, but he did have some opinions on the matter. Now, obviously, he can't do anything about the federal deficit, but he can have an opinion on it. So the federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not suitable. The path is unsustainable. So those were key words by Jerome Powell. But once again, it is not the Fed's job to manage the budget and manage the deficit, of course. So that is all that he had to say on that matter. Moving on down, monetary policy is still restrictive. Even though they're bringing down interest rates, they still view that the policy is sufficiently restrictive enough. And as a whole, guys, in terms of the cuts today, it was a unanimous decision. Every single member at the Fed was in line with bringing interest rates down 1/4 point. So we think that even with today's cut, policy is still restrictive. Very simple, right? Powell reveals one inflation report came in a little higher than expected. Overall, we're feeling good about economic activity. At the same time, we got one inflation report. It wasn't terrible, but it was a little higher than expected. By December, we'll have more data. I guess one more employer report, 2 more inflation reports, and lots of other data. And we'll make a decision as we get to December. So once again, refusing to give any noteworthy guidance. Fed Chair Powell said policy is well positioned to handle the risks ahead. If the economy remains strong and inflation is not sustainably moving towards 2%, we can dial back the policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can move more quickly. So once again, leaving the door open on both sides. Regardless of what happens, they will be data dependent. They can cut rates more aggressively if things get bad, or they can even keep them the same if ever things are too good and they're worried about an overheating economy. Yes, I know, with all the recessionary headlines, still worried about the economy overheating, right? Fed Chair Jerome Powell says the central bank is not on any preset course. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risk. So once again, guys, as you can see, Jerome Powell staying extremely neutral. There's not much else. I mean, I can read you guys more headlines. I listened to the entire meeting, but really the moral of the story was that, right? They do not see any major red flags right now. The PCE inflation report, which he, focuses on more closely, is now at about 2.1%. Core, of course, is closer to 3%, which is why they say they will remain data dependent, guys, and they have not provided any guidance. And when he was asked, I know everybody's wondering about TLT and the 10 and 20-year yields. There was not one, but there was one question on the matter. There were several questions, but the way he answered it is he doesn't feel that the yields, the 10, 20-year yields jumping away, he doesn't feel that they are troublesome at all. And in fact, he literally said that, that the yields will move with the ebbs and flows of the market and that they will revisit them at a later time in the event that it becomes problematic. So even right now, because obviously he was asked the question, you guys cut rates and yields are skyrocketing, right? And he was asked the question and he said, well, obviously, if you look at the 3, 6 month and 1 year, they're moving in line with our policy. But for the 10 and 20 year, they do not see any notable problems with the rate of those yields just yet. So that's why, even though he did give those speeches today and they did cut interest rates, right, TLT is still relatively low. Take a look at your 10 and 20 year yields. They are still excessively high. So if Jerome Powell doesn't see any large problems with these yields, it just goes to reiterate what I've been saying over the last few weeks at this point, right? Yields can stay high on the 10 and 20 year. The 1 year, the 6 month, they will drop, possibly the 2 year as well. But the 10 and 20, guys, that is open market. That is just supply and demand for essentially bonds, right? And as long as the Fed is not doing any quantitative easing, meaning it's not adding any of these to its own balance sheet, well, it's going to be very hard for other market participants to kind of follow behind. As well, if the economy is not sliding into a possible recession, the jobs market is not coming undone, well, there's no real rush and people flocking to bonds as if it's an emergency to lock in a 4.65 rate for the next 20 years, especially when the opportunity cost is missing out on a substantial equity rally such as the one right now, right? So yields, once again, can remain slightly elevated on the 10 and 20 year. Jerome Powell himself saying that it's not too much of a problem, which is why I'm currently still staying away from the TLT trade. I think that it's a decent level, but in terms of the timing, when those yields will start coming down and when TLT is going to start coming up, that, guys, is anybody's guess at this point. So rather than trying to pick the bottom on TLT and trying to go for the big rally, I would rather play other sectors which are currently very favorable right now and offering some extremely good gains. And then once that trade is ready, I will take all my Mag 7 gains, well, not all of them, but I'll take a portion of them and probably rotate them into the TLT trade when I deem it to be ready. So that's pretty much the fact of the matter for the Federal Reserve news today. Now that we're through that, let us dive into some earnings, shall we? We're going to start off with a good one. It is going to be Square, aka Block. So we know that Square has been having a very nice time, especially over the last month of trading. The stock has been pretty much up over the last month of trading, roughly about 20% before today, right? So they're coming into earnings with a little bit of high expectations and off a very decent rally. The stock currently is up year to date. Well, actually down year to date. They're flat, 0.3%. So this earnings was going to be all about efficiency and increases in EPS and increases in net margins. So let's see what Square did. So unfortunately, they came in with a double miss. So they missed on EPS by a fraction of a penny, 1/10 of a penny. So, I mean, EPS largely coming in line. They did miss on revenue there by about 4.2%, however, which is why the stock initially, because of that miss on revenue, the stock initially came down a ton. It was down almost 14% before retracing most of that move because the focus on efficiency was initially missed by Wall Street. So let's talk about that focus on efficiency, shall we? Moving on in, Block reports revenue miss, but a slight beat on earnings. We actually saw earnings were kind of in line. So, Block reported third quarter revenue on Thursday that trailed the Wall Street expectations. The stock initially sold off after hours, but erased most of its losses as investors focused more on profitability metrics. And we've been talking about this for a while on Square, right? The growth has never been a problem. If you can see the growth rates right here, they're growing revenue at a healthy 11% per year, and they're growing EPS in a very, very, very rapid manner, right? And their profitability, the company used to be somewhat, let's say, arguably profitable, right? 2%, 1% to the upside, some quarters negative, some quarters positive. But in the last 3 quarters, they've been doing leaps and bounds in improving their net margins up to about 3, sometimes 6, sometimes 7% net margins. So the focus has been all about efficiency from Jack Dorsey. All right, Jack Dorsey is the founder, previous founder of Twitter, essentially, and now he's at the helm of this company right here, which is Square. Let's move on further, shall we? So they posted $2.25 billion in gross profit, 19% increase from a year ago. So that's where the big headlines should be. Net income of $283.7 million. That is a 4.7% net income. And as you can see right here, the net income has always been oscillating in the last 3 years, right? Now they're back into positive territory, and that is a net increase over last quarter's net income of about 3%. So nice to see them come in at about 4.7 this quarter. They're on the right trajectory. Let's continue. The Cash App business, the company's popular mobile payment platform and a significant contributor to overall profitability, reported $1.31 billion in gross profit, a 21% year-over-year jump. Very good. GPV, gross payment volume, came in at $62.4 billion, slightly missing the analyst estimates of $64.3. The company has improved its cost structure. Gross profit for the fourth quarter will increase another 14% to 2.31. So obviously, you guys, you can see what's happening here. Big time focus on profitability. Now let's continue. So they're doing a bunch of lending products now, which is why I like Square. Square is kind of a 3-in-1 solution. It has what PayPal has, a peer-to-peer cash transfer system in the Cash App platform. They do what Affirm does, buy now, pay later solutions. And they also do what SoFi does. They have banking, they have trading, and they do have loans. And now they're expanding their loans division as well, which is why I like this company, guys. So They're looking to transform Cash App cards into a better alternative to credit cards. And they're also increasing their exposure to loans. So now let's move in further. The company's lending products use AI to enable smarter and faster decisions and to help Block manage risk and be agile in how we underwrite consumers and small businesses. It wouldn't be an earnings report this quarter without all companies mentioning AI. So nice to see them mentioning it there. She said that's helped the company maintain low loss rates across each of the different products, talking about loans. Those rates are about 1% on buy now, pay later. That's very good, guys. For the losses, 3% on Cash App Borrow, and 4% on Square loans. Very, very, very good in terms of the default ratios right there. Now, Cash App could help Block develop on an advertising business and charge merchants for promotional pricing or brand placement. That's very interesting. PayPal has not done this yet with their Venmo application. So if Cash App does this first, I expect PayPal to follow. This could be a good source of revenue generation and profit margin generation for the company. Nice to see them explore that avenue. Jack Dorsey said on the earnings call that when it comes to Bitcoin, the company is focused on making it more accessible, which it does through Cash App, being able to pay for things in Bitcoin, transfer Bitcoin as well, but also buy and sell Bitcoin on the open market. The company said it had 8,300 Bitcoin at the end of the quarter, which is currently worth about $630 million. So nice to see that their Bitcoin position that they built over the past few years is now deeply in profit and contributing nicely to the investment portion of the balance sheet. Let's jump into a few of the earnings slides, and then we're going to wrap it up thereafter. So take a look at this. This is the gross profit, guys. Cash App versus the Square portion of the business. Square is essentially their merchant solution business, right? Where they have it's kind of like a debit or credit card machine that you use to check out whenever you're in a store or something like that. If you've seen the white devices, right, where you tap your cards, a lot of those are Square. Now, there have been a few other companies that are giving Square a run for its money, especially in the restaurant business, and that company is Toast. But all in all, that business for Square is still doing quite nicely, expanding their gross profits every single quarter pretty much, and expanding the green Cash App business very well too. So here's our focus on improving profitability. As you can see, net income is now pivoted from a loss at the same time last year into very nice gains. We're talking about 13% margins right there, which is very good. That is non-GAAP, of course. So the GAAP one is obviously a little bit lower, but nice to see that their operating income and their net income has been doing leaps and bounds. It's nice to see that management is focusing on exactly what shareholders wanted from the company. Let's move on further, right? Adjusted EBITDA is going up, which is your pre-bottom line, right? Which is earnings before interest, taxes, depreciation, and amortization. A bunch of complex things. All you need to understand is, for all intents and purposes, you can use this as a proxy of profitability. So 69% year-over-year growth is very, very nice. Now, the Cash App business, guys, well, look at the Cash App gross profit, right? As we saw in the previous chart, 21% year-over-year, looking very nice. Double-digit growth rates, over 20%. Monthly transacting actives has also been slightly flat in the last 3 quarters, admittedly, but they're not losing any clients. The inflows per person are also up from a year ago, up to about 1,233. And the monetization rate, how much they can convert these Cash App clients into other clients that uses their services, is fairly good at about 1.52, right? You guys know, if you've been in the advertising business or stuff like that, usually conversion rates are always between about 1 to 4%, right? If you can get a 4% conversion rate, that's a fantastic business. But to see them between, 1.5 to 2 is pretty decent for them. Now, moving on further. Right, gross profit per monthly transacting active has gone higher, so looking very good, driving greater engagement and monetization, looking good there. The Cash App card actives growth has been doing good as well, engaging with more and more clients overall, but in the last 3 quarters has been flat. Taking a look at their Square business now, gross profit, nice little curve there, also growing at a year-over-year double-digit growth rate, which is very good. Gross payment volume is also increasing very, very nicely in the last 2 quarters, so nice to see them doing a lot better than they were end of 2023, when the business was kind of showing a cyclical rounding out of the bottom, right? Now, in terms of their guidance, this is the last slide that we're going to do. Q4 guidance, right? So here's the previous. You can see no change on gross profit, but I want you guys to see the increases in the net profit, right? So they're guiding with a little bit of an uptick in EBITDA margins to 34%, which is very good. Operating income, they increased the guidance there as well. So they haven't really increased the guidance for top line gross profit or much in the terms of top line revenue, but they're focusing on more and more and more cost control. So overall, guys, very good report from Square. I'm quite happy with this one. Where do we stand in terms of the valuation? Well, let's take a look at their balance sheet right here. As we can see, the balance sheet, I mean, they have a lot of cash, guys, a lot more cash than they do have debt on the balance sheet. They're bringing in a little bit of free cash flow per year, which is much more than we can say for the last 2 years, right? Last 2 years were a little bit of a struggle for Square, cash flow negative, but now they have been cash flow positive for the last 3 quarters, which is very good. A lot more cash than debt on the balance sheet. So balance sheet, it gets a pretty good rating from me. No problems there. Thereafter, in terms of their growth, guys, look at this EPS expansion. So focus on profitability is here looking very good. And the revenue run rate is about 11% per year. Admittedly, I'd like to see this a little bit higher, but there's definitely not anything wrong with an 11% per year revenue growth rate, right? So all that being considered, 11% growth rate for revenue through 2027 per year. EPS expansion, 35% per year. That is definitely the highlight of this company. And I'll explain why. At $72 with, this big of an EPS, you get a PE ratio on a forward basis of a 20.6. Super cheap for a tech stock, guys, at a face value number. Moving into the PEG, divide your PE ratio by this massive EPS growth rate, you get a PEG ratio of 0.58. Anything under 1 is cheap. Anything between 1 and 2 is okay. Anything above 2 starts to get expensive. For you to find a tech company that's growing really, really well, that has substantial EPS growth at a 0.58 PEG ratio, guys, this one is one of the cheapest tech stocks, profitable tech stocks in the market right now, in my humble opinion. And price to sales, another kind of more defensive ratio, right? Usually you use this for more value-oriented companies. Tech companies usually get price to sales ratios of anywhere between 5 to 10 and PEG ratios anywhere between 1.5 to 2. So I do think this company is significantly undervalued, and I do think that a lot of analysts would tend to agree with me as well. I would not be surprised if Square can expand its price into the next 6 to 12 months, at least probably in the event of a nice bull market continuation, and Square continuing to do business as normal. I wouldn't be surprised, guys, if we can get a $90 to $100 share price, in the next 3 to roughly 12 months, probably sooner than later, because the valuation does definitely allow for a lot of upside continuation. So that's my thoughts on Square, guys. You know me, I've been buying the heck out of it down here. I got a few leap contracts as well. So I did play earnings as well. I won't show you guys the entire portfolio breakdown essentially, right? But what you guys can see, what I want you guys to see from these earnings is the fact that Square down here, right? So I have a few positions on Square. You guys know I've been doing the 2 standard deviation earnings moves, right? So we took the 65 and the 64 puts. Those will pretty much be worthless probably by tomorrow morning. So we made a decent amount of money right there. And also we do have some leaps, right? You guys remember that I have a bunch of Square leaps, if I can find them right here. 4 leap contracts. We're up literally 56% on those. So I played a little bit of defense on them prior to earnings. And that was pretty much doing some covered calls at around 1.5 times the expected move. 87 calls for next Friday at $1.45. So we were able to lock in some very juicy profits on those with the stock not moving too much after earnings. So all in all, been a very nice performance from me on in terms of playing these earnings, collecting a lot of money from the short puts and collecting a lot of money from the covered calls as well. I will keep these leaps probably for a good portion into next year as well. I want that $100 target. We bought the lows pretty much, so very happy with the way that went as well. Now moving into earnings number 2. So earnings number 2 is going to be another juicy one, guys. It's going to be AirBNB. So AirBNB, as we well know, guys, AirBNB has really struggled over the past 3 years since their IPO to do much of anything, right? People that bought up here still haven't made a single dollar. And people that bought down here, although they're up, we're not up that much, right? So let's move into Airbnb's earnings and see, could they surprise us with anything, or was it kind of more of the same? And unfortunately, in this case, guys, it was kind of more of the same, right? They're not really increasing the growth rate that substantially. They're growing really, really well, but we want to see even more growth for Airbnb. Now, keeping that in mind, in terms of their earnings, they were down here pretty much, miss on EPS by about 0.46, and they did beat on revenue here by about 0.4. So not that bad, but a little bit of a mixed quarter. I think investors and institutions were looking for a bit more on Airbnb in that aspect. Now let's move into some of their earnings, shall we? So Airbnb misses on earnings, but squeaks in a revenue beat. Let's continue, shall we? Revenue increased 10% from a year earlier, which is very good. Net income right there was 36.7% net, which is very good for Airbnb. Airbnb has kind of oscillated between the 20 and high 30% range in terms of net margins in the last few quarters, excuse me. If you can see right here, we'll pull up the big chart right for net margins, right? In terms of quarterly, right? They've been about 12. They were first at 12, 20. This was a big one-time tax event for the company. So we know that they've been oscillating for the last 2 years, anywhere between 20 and 30% net margins. This was a very good quarter for AirBNB, coming in at over 36% net margins. So the highlight of the quarter, in my opinion, is that right there. The company now expects to report revenue between 2.39 and 2.44. The midpoint is arguably the 2.42, right? Coming in right in line with analyst expectations. So no real boost on guidance. Now, AirBNB said it's focused on expanding beyond its core markets and into under-penetrated markets around the globe. I forgot to tell you guys what the price action was on AirBNB. Look at this massive candle print in the after hours, guys. And unfortunately, they gave it all back, right? So the company was initially on the day already up like 5% before their earnings. And then they pretty much gave it all back, right? So no change on AirBNB for the day. But when their earnings came out, they were actually up over 13%. And they didn't hold that, guys. They held it for a good 5 minutes before giving it all back, before the more of the earnings started pouring in, right? AirBNB said it's focused on expanding beyond its core markets and into under-penetrated markets around the globe. They said that the average growth rate of nights booked in AirBNB's expansion markets was double that of its core markets on an origin basis during the third quarter. So looking to expand into even more countries at this point. We'll remain focused on accelerating growth while preparing for AirBNB's next chapter, which will take us beyond accommodations. AirBNB said, you'll see more on this next year. So what are they possibly going to do in terms of expanding beyond normal accommodations? Think maybe what Booking Holdings is doing, Expedia is doing, maybe bundling flights, cars, things like that, right? So they haven't formally released anything, but we'll see what they can do, of course. Now, gross booking value, it was 20.1 billion for the third quarter, which is good. That was above the consensus of 19.9. This is just how much money AirBNB makes when you buy a trip with them, essentially, right? The total value. Now, obviously, AirBNB doesn't make all of that in terms of net revenue, but this is just gross booking value from all the trips that were booked in the quarter, right? So 123 million nights and experiences booked, up 8% from a year ago, and higher than the 121.4 million from the expectation. So slightly beating the expectation as well, but nice still on the growth metric there. AirBNB said it saw hosting growth across all regions and market types during the third quarter. The company said in its shareholder letter that it has more than 8 million active listings and has worked to improve listing quality. They have removed more than 300,000 listings since last year. So trying to focus on the best ones, the most active ones, and removing the non-active listings. Very important, right? Average daily rates increased 1% from a year ago to 164 in the third quarter. So AirBNB, not a company with the best pricing power in the game, but they can still increase prices, and they probably will not lose clients in the process of doing that. So let's take a look at the quarterly revenue numbers right here. We can see a very nice increase quarter over quarter and year over year, looking very, very good. In terms of quarterly net income as well, here's that one-time tax event. But if you were to remove that, they are growing their net income on a quarterly basis fairly well. It is a little bit choppy from here and there, but they are growing it very well. And this company is generating a very good amount of free cash flow. Here's their EBITDA as well, going up in the right direction. Operating, net cash provided by operating activities, very good. And that translates into bringing more money to the bottom line in terms of net margins and consequently free cash flow as well. They're running a free cash flow margin of 29%. So another $1 billion in free cash flow trailing 12 months now stands at about $4 billion in trailing 12-month free cash flow, which gives them a free cash flow yield, guys, of 4.4%. This is very, very, very good. We'll get into the metrics in a little bit here, but the free cash flow yield of 4.4 is very, very, very solid for the size of this company. And lastly, they did repurchase about 1.1 billion of stock in the last quarter. So now we can see the continuous repurchase of shares and essentially the diminishing share count in the open market. So that's going to do wonders for them in terms of improving their EPS over time. Now, in terms of their balance sheet, let's have a look right here. So in terms of the financials, well, the financials, guys, I mean, the company's set up very, very nicely. Nothing bad to say there. A lot more debt than they have, a lot more cash than they have debt by about almost a 3x at this point. And a lot of free cash flow per year. We just saw trailing 12 months was about 4 billion, right? So free cash flow is not a problem for them. Debt is not a problem for them. Very nice balance sheet there. in terms of the forecast, right? So EPS. So here's the reason that Airbnb doesn't get the love that it deserves, in my humble opinion. It's just been very, very choppy, not that consistent in terms of EPS. This is why EPS matters a lot to Wall Street and why they kind of refuse to let certain stocks run if you don't have a consistent and predictable line of EPS growth. Now, the EPS growth is very decent right there, but as you can see, it's been fairly choppy over the last few years, but it is nice. Revenue growth as well. Revenue growth is slated to be very, very good for the next couple of years. So nice to see that for Airbnb. Revenue growth 11% per year, EPS growth 16% per year. That gives them a PE ratio at 141 of about 34.3. It doesn't sound that high for a tech company, guys, but when you're only growing EPS at about a 16% per year, you get a PEG ratio of 2.14. That's a little bit high, guys. It is a little bit high. I would like to see this down in the 1.5 region. As a matter of fact, guys, that's why I was saying back here, Airbnb was a heck of a steal in my humble opinion. But now at 141, we're getting to that range where, you know, it is a little high. We're not getting a good deal. I mean, I guess if you measure in relation to the all-time highs, you would think that you're getting a good deal. But on paper, even though the company's expanded nicely, it's actually not that good of a deal when you measure by the EPS growth rate to the future forward growth rates as well, right? Now, moving into the free cash flow yield, 4.4% is good. Anything between 2.5 and 5 is fairly good. You want to be closer to 5. So back here, guys, this free cash flow yield was closer to a 6%. So, I mean, back here was great valuation. Up here, you know, it's debatable. I don't mind buying any Airbnb here, but you're definitely not getting the best deal for it. If anything, I'll continue to look to possibly write short puts down here in the lower 130 range. And that's where I want to continuously play this company. This range has been a hotly contested area, either as support or resistance so many times for the company. And now that we're through it, I think we're going to be able to use it once again as a zone of support. Nothing bad with the company at all, which is why I will still appreciate playing some short puts down here. But if we're looking for the moonshot, right, in terms of Airbnb, well, yes, if the market continues going up, the SPY and the QQQs keep going up, Airbnb can keep going up. But do they really have the fundamentals to warrant a doubling of the stock very quickly? Not so much, guys. So this one is on a nice little uptrend, guys, but I wouldn't be going ultra heavy. For a long-term portfolio, I am a long-term investor in this company. I have built a position in it over the last few years, especially down in these lower areas. Right? So I do have some skin in the game. I'm holding my shares. I wouldn't mind adding a little bit more. And even to start a longer duration portfolio, if this is a high conviction company for you, well, I don't really see any major red flags with that. So that's everything for Airbnb earnings. Hopefully you guys appreciated that. And in terms of the positions for Airbnb, I did take a few trades. We're only going to be going over these, guys. I'll give a full portfolio rundown tomorrow. But as you can see right there, right, Airbnb, I had 2 short put contracts on it. One for this Friday, the 125s for 52 cents, and then the 120s for next Friday for 45. So those 2 should probably be entirely worthless tomorrow. Another almost roughly $100 collected on premiums, just playing a super, super conservative earnings strategy, guys. So those are the trades on Airbnb. And now lastly, the trade desk. I don't want to jinx anything, but we've been pretty much perfect on our earnings play this week for myself and also for the members in our Discord. We've hit every single one, guys, with some decent size. We've come out and won every single one. So, you know, knock on wood that nothing changes in the pre-market tomorrow. These stocks would have to drop by 20% for us to be at risk anyways. And at that point, I just assume taking the shares in terms of being assigned. So not too nervous. Now, company number 3, Trade Desk. So Trade Desk, guys, it was their battle to lose. We know that this company, since their last earnings, this company is now up 70%. They have a year-to-date gain of 85%. So when you've rallied so much, guys, kind of like NVIDIA, we've touched upon this before, right? You have to justify the gains. And in this case, unfortunately, Trade Desk was its own worst enemy. Its prior gains hurt its current performance. So let's move into it. Trade Desk now down in the after hours, roughly about, about 10% from the highs of the day, right? 10.5% roughly. But it's not because they performed poorly. It's just that they set the bar so high, guys. And when you set the bar too high and you can't continuously beat the bar, eventually you will have a little bit of a pullback, right? Especially when you're up so much year to date. Now, keeping that in mind, let's take a look at their numbers. And at a first glance, their numbers are good. They beat on EPS bottom line by 4%, beat on revenue by about 1.27. So the quarter was good, but they did not beat and increase the guidance. Take a look at this. The Trade Desk shares fall as solid results failed to meet high expectations. So revenue for the quarter came in at 628, up 27% year over year, well above the estimate of 620. For the fourth quarter, this one right now, they're expecting revenue of 756, slightly above the consensus of 752. That's why the stock is down 10% in the after hours. They raised guidance, but they didn't raise it by enough, guys. They only raised guidance by not even 1%. Wall Street was looking for more, and when they didn't get it, well, they figured maybe we priced in too much growth into the stock and could be a good situation for a pullback. Now let's move on. This performance underlines the value that advertisers are placing on precision and transparency as they work with us to maximize the impact of their campaigns. Despite the solid results and positive outlook, the 7% drop in share price suggests investors had set even higher expectations for the ad tech firm. The company highlighted its continued success in customer retention, maintaining a rate of over 95% for the 10th consecutive year. So Trade Desk, guys, if you don't know what the company does, essentially, it should need no introduction, but in the event that you guys don't know what they do, I mean, they're partnered with some of the largest brands in the entire world right now, right? Like almost everybody, uses them. Even Google Ad Manager, right? They have so many partners. It's absolutely ridiculous. You can talk about, Netflix, Adobe, like everybody, essentially, all the legacy media as well. Essentially what they do, guys, is they are a market maker for advertising. They match these two people. They match the advertisers and the ad agencies to these publishers and sellers of content. So whether you're on either or side, Trade Desk matches you together. Let's say you are Netflix, right? And you want to advertise Netflix as a brand or advertise shows. Where do you do that? Do you do it on Facebook? Do you do it on Instagram? Do you do it on TikTok? Do you do it on regular legacy media, TV channels, stuff like that, right? Where do you do it in terms of trying to maximize your ROI and your client engagement and client follow through conversion? Where do you place those ads and what time of the day and which days do you place those ads? So Trade Desk is they have a very advanced algorithm that tells these companies where and when and on which platforms they should be running their ads. So they're an ad optimization business. Hopefully that makes sense, right? Taking a look at the numbers, guys, their numbers are fantastic, right? So gross spend in terms of how much spend is put through Trade Desk by advertisers and supply side as well. So look at this gross spend, guys, double digit. Now, obviously you cannot grow at 86% forever. So this is a normal growth curve. They're slowing down, but they're still growing, 24% year over year, which is fantastic. Revenue, same thing. You can't grow at 78% forever. And eventually you hit the law of large numbers, right? So revenue still growing double digit, 23% year over year. Nothing bad to see there at all, guys. Everything is hitting records for the company, right? As I already said, they are pretty much matched, right, in the marketplace. I don't know why they left this blank. Essentially, usually there's a bunch of companies here. I should bring up a previous report. Usually they put a bunch of companies here to give like an example of how it works. Essentially, hundreds of different people are within that as well. Here's your 2023 spend by industry. We don't have the 2024 numbers so far, but a fairly decent presentation. Just want to double check something. Yeah. I'm not crazy. I thought that somehow I picked up the 2023 report, but I really didn't. But it's just when they show me outdated charts. So here's your spend, right? Food and drink. If you guys didn't know, it's fairly important for companies like Meta as well. But here's your breakdown of where most of the money goes in terms of spend, right? So it's all in the consumption, most of the consumption things right there. I was surprised to see travel at only 6%. I was expecting that to be higher. Food and drink, definitely number one, guys. In terms of global presence, they're literally everywhere, guys. We buy the whole internet. Even media that isn't digital will be transacted digitally using the internet. So we buy the whole internet right there. So, guys, there's not much to say about this company. It was business as usual. But as I said, they set the expectation bar very, 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 very high for the company, right? I'm just trying to find if there was any other significant key performance metrics that we could look at. They do a good job of putting together like 45 slides, but none of it is actually noteworthy to us. Oh yeah, this is one. This is sustained profitability. So non-GAAP net income. The revenue ramp is real, bro. So you have adjusted EBITDA here. So the revenue ramp above is real, but also their net margin ramp is very, very, very solid as well. Nothing bad to say there too. So guys, there's really nothing much to say here on the Trade Desk. If you want to take a look at net margins, gross margins have always been really high. Now, their operating costs do fluctuate with the overall economy, but so far they've been doing good at optimizing the business a little bit better. Their net margins margins for the quarter came in at roughly, I think it was about 15 percentage points, if I'm not mistaken. Let me just do it again so I'm not just saying anything here. I think I did that. I think from what I remember, I didn't write it down anywhere. But yeah, it's about 15%. It's about 15% net margins, which is well above what we just had in the most recent couple of quarters. So everything's going up nicely, guys. There's literally nothing bad to say about the company. All the key performance metrics are up. They have more clients. They have high customer retention. The revenues are going up. Their net margins are going up. It's just they set the expectations so high. And when you're running a crazy high valuation like it is right now, any underperformance under the bar is going to bring you down. Take a look at the financials right here in terms of the balance sheet. Balance sheet, guys, no problem at all for this company. Take a look here. A lot more cash than they do have any debt, and a lot more than they bring in terms of free cash flow. Looking very, very good right there. So free cash flow, a lot more than they have debt per year. They can use that for share buybacks. They can use that to pay down some of the debt. Looking very good. Cash on the balance sheet is very, very healthy. No problem for the company at all. Taking a look at the EPS growth and the revenue growth, you can see a very clear EPS ramp. Consistent and predictable for the most part, and a consistent and predictable revenue ramp curve as well. So no problems with the company, guys, just a victim of its own prior success. Revenue growth 18% per year, EPS growth 28% per year. Healthy. All of that combined cannot give them a cheap valuation, though. At 119, where they stand right now after their earnings, they're sitting about a 73.5 PE, quite high. But when you divide it by this fantastic EPS growth rate, you get a PEG ratio of 2.62, guys. That's just too high, right? You got companies like, you're higher than Microsoft valuation, right? At that point in time, you got Mag 7 companies that are trading for almost half of this, right? So Trade Desk at 2.62, it's a pass for me. I assume, if we're holding any shares from prior all the way back here, if we've accumulated any shares, I don't really see any reason to sell because the company's metrics are going all in the right direction. But starting a position up here, guys, at such a high valuation, probably not the best risk to reward, in my humble opinion. And a lot of analysts do agree with me. The price targets have been revised. This guy doesn't know what he's talking about. But for the most part, the average is about 119. So a lot of people are sitting at holds, strong buys up until maybe the 130, 150. But beyond that, guys, it gets really, really, really rich for this company, even though they're doing very, very well. In terms of trades as well, right? If I want to take a trade on this one, we don't really have any defined levels. If anything, I'd be more interested. I'll keep it on a watch list. I look at it every other day, but in the event we revisit for some which reason 110 down to 100, it gets more manageable, and you go for the good old on the monthly, right? The good old breakout and possible retest of like the 110 prior all-time high range, right? So I'd be looking for something like this. Eventually, we are going to get a monthly pullback. Not too sure when or how much. But if for average reason we pull back and the company's still putting out fantastic numbers, just maybe the company just pulls back for a few months, something like that, it happens to the best of them, right? 110 down to 100 is probably where I'd be more interested in playing the stock. And that is everything for the Trade Desk earnings. So hopefully you guys appreciated that. In terms of the Trade Desk positions, I did not have any Trade Desk positions myself just because it was too high. And when I priced in the premiums, there's just not much there for me. The only ones I did today were Square. We did some Rivian as well. As you guys can see, I have some Rivians. Those should be doing quite well. Those should be worthless tomorrow as well. And in terms of the other earnings ones, we had some the ELF ones that went pretty good. Those will be worthless by tomorrow. I got even more greedy by doing the 110s. Other than that, I don't think there were any. Oh yeah, Affirm 35s for tomorrow were in earnings. We didn't cover them. We didn't cover them in today's earnings, but Affirm, another buy now, pay later service, of course. They were down slightly in the after hours, but I don't think I'm gonna get a sign. They're pretty much flat in the after hours trade, so should be looking quite good there. I had 30% margin of safety, so looking good. That's pretty much all the trade recap I'll give you guys for today. Tons more that aren't there, tons more that we close. I'll give you guys the good old trade recap tomorrow in this format when we give you a huge recap from my Discord. This is last week's, by the way. This week's is even better. Made a ton of money. So moving into the QQQ, where is my SPY? Where did my SPY go? Did I delete my S&P 500 chart? I hope I did not. Let me just add it there again, guys. My bad for that. So add symbol. This is unfortunate. This is very unfortunate. I hope I have the same, should be the same one where all my drawings are. Hope it's the same one. Is it? Should be. All right, so moving into the SPY. Yes, perfect. Awesome. So moving into the SPY, guys, we're going to go through these quickly because nothing much has changed, right? Other than the short-term time frames, we are not daily overbought just yet. Obviously, all-time high break. Keep an eye, guys. 1 hour is a little bit overbought. So if you want to see a daily pullback, instead of trying to pick the tops, right, which is what everybody's trying to do right now, watch for the loss of the hourly time frame. Only when you lose the hourly time frame and the hourly trend will you possibly be willing to get a daily pullback. Now you can use something like, trend line analysis like there, and you can say like, okay, perfect. We're nearing pretty much the top end of the channel, which is fine. But until you get that 1 hour time frame rollover, you won't have confirmation that you are indeed going for the daily pullback. So watch for the daily pullback. If you do get it, guys, quite simply, anything at this point above 568, looking for a daily higher low for further trend continuation. And where is the area of support, guys? Quite simply, it's where we just broke out of, right? This whole 580 down to about 578. This is the area that I do think the bulls will find the best support in. So nothing to see on the SPY, guys. Bulls in absolute full control of the daily, absolute full control of the weekly as well. Nothing to see here. They control all the time frames. Moving on into the QQQs. So the QQQs as well, right? Is it a good proposition to be buying the SPY and the QQQs at the all-time highs, hourly overbought conditions? Probably not, but can we look to buy some pullbacks for some continuations? Probably, right? Same analysis for the QQQ. The QQQ as well, breaking out new all-time high today. Daily, still not overbought, but the 1 hour is, quite overbought at about 82. So once again, guys, just watch for the loss of the hourly time frame. There and only there will you have a official daily pullback. And where are we going to pull back into? We're probably going to pull back into the roughly 500 to 497. Wouldn't be surprised if we come back down there and tap into that whole region in the event we get some pullbacks into maybe tomorrow, early next week before another leg up. So I'll be partially looking for a breakout, a retest, and possibly rally because the bulls are in full control. So I will be buying any and all pullbacks. Weekly looking nice. Gorgeous weekly uptrend, nothing to see there. The bulls are in full control, guys. What do you want me to say, right? Full control. Got to call it as I see it. Moving into financials. Financials down 1.61, but that's fine. They put in a over 4.5% move yesterday. 6% move. I forgot. It's true. 6% move yesterday. So this little pullback here is not going to do much of anything, right? Bulls is still in full control. Daily, looking for a daily higher low. At this point, anything above 46, looking for that daily higher low. Just like the SPY and the QQQ, right? Watch for the loss of the hourly time frame. And then when you get the hourly time frame follow through, that's when you know that you're in for a little bit of daily consolidation. Where can daily consolidation go to? Well, where we just broke out of 47.60 down to about 47, looking for the higher low test and possibly run thereafter, the good old breakout retest trade. And that's important because we never lost the weekly uptrend. We were always even throughout this daily downtrend. What I was telling you guys leading into the election, right? I was saying that even though we have tons of volatility, who's in control here? The bulls never lost control. Beautiful weekly uptrend and beautiful weekly follow through. So we'll keep an eye on this, guys. My favorite trade in that sector currently still is Berkshire. I think Berkshire is doing some really nice accumulation in this zone right here around the 460 to 455. So it could be looking good, guys. But I mean, what are we doing on Berkshire? Just remember, we're forming the monthly higher lows for possible continuation. So normal that Berkshire sometimes does consolidate before putting in a nice monthly leg of rally further. So I'll be keeping a close eye on that consolidation as we move through the weeks, right? Now moving on to XLV. So XLV bulls doing what they have to do, right? We know that this is the cannot lose area, 148 down to about 145. Cannot lose because it's a very big level in terms of the weekly prior resistance. Resistance should now be support. The 50 EMA is there as well. Have not lost the 50 since we started the rally back in 2023. And also cannot lose area because it is also the 12-month EMA, another trend guide that we have not lost since the uptrend in 2023. So healthcare playing some good defense right now. Daily, looking for the uptrend continuation, guys. Still looking for the higher low right now. How do you know the higher low is set? Well, you will get a recapture of the 1 hour time frame, which was done over the course of the day today. This was a big anomaly, so I'm taking this one with a grain of salt, guys. I mean, the daily upswing is still in motion right now, so daily uptrend, any pullback right now, still going to be looking for a daily higher low, anything above 146. Daily higher low for further trend continuation. Keep in mind, we do have a little bit of resistance above us. 151 to 150. And what are we trying to do, guys? Well, we're still trying to reverse this weekly downtrend, right? Big weekly downtrend. So now that we're in a daily uptrend, right, we're going to be looking for the size of the retracement up. And as of right now, they didn't get up at least, well, if you count yesterday's candle, right? If you do count it, we got up to about 618. If you don't count it, we're up to about 0.3. I would like to see a nice weekly close into at least the 50% range, which is about the 150 mark, or a little bit higher, the 151 for the full 618. That'll set up the bulls very nicely to start recapturing and maybe do the two-step recovery process into a new weekly uptrend. So we'll keep ourselves posted on XLV. Definitely one that I'm watching closely. Now, semiconductors having another brilliant day, guys. And this one was really broad-based, right? Everything up once again again. NVIDIA, AVGO, even AMD finally getting some love today. Intel up 5%, you know? So even if even Intel is running, you know that it's been a good day in semiconductors, right? So semiconductors breaking above and closing above our area of resistance. I mean, it's not the cleanest break, you can argue, but it is a break above, right? So we were concerned about the possibility for the continuation of the daily downtrend, but the bulls coming in to play defense. Why is that important, guys? Because they never lost the weekly uptrend, always looking for a weekly higher low. And I was telling you guys, watch for the 26 and watch for a possible pullback to 240 into about 232. Now, we didn't quite fully get there, but the location and the analysis was good. We were always looking for the weekly higher low for possible weekly trend continuation. If we do close a weekly like this, I think they'll get it, guys. The one thing that jumps out to me is look at the MACD, right? So MACD is always a trailing indicator, which is why I don't like using it too much. But if we close a weekly, this is why it's important. The weekly higher lows are now set. If we close a weekly like this at the top end of support with a bullish close, and you have a weekly the MACD that wants to cross on the weekly, what do you guys think is going to happen, right? Well, the odds of getting continuation into next week are quite high, right? When the stars align, so they say. So looking good now, even if we do get some pullback into tomorrow, just looking for a higher low, anything above 240, looking for the daily higher low for a new daily uptrend, and simply also looking for the progression of this new weekly leg higher. So looking forward to see how they close tomorrow. One of my favorite ways of playing this industry as a whole, guys, is once again writing short puts under the market on my favorite stocks, which I've been doing aggressively on NVIDIA, AMD, TSM. Moving on to IWM Russell. So the IWM, you know, maintaining gains from yesterday, right? So a big portion of the IWM rally yesterday was the small and mid-cap banks, because we know that financials, even though people don't talk about it that much, those small and regional banks represent about 17% of the weight in the in the IWM index. You know, 17% of it is this KRE. So when KRE is flat, you know, like look at this chart, right? KRE, look at this chart, and now look at IWM. Is it not the exact same chart? That's why it matters a lot, right? But what we do have is a clear break of resistance right here, and I'll be the first to admit that, right? If we get a weekly candle close above here, I will change this whole area into a green box, well above the previous resistance from 2020 and 2021. So now we're looking for the, the classic breakout, retest, and run trade. Well, you know, some people call it the trend continuation trade. I like to call it the breakout retest because it puts a lot of emphasis on the fact that we broke a major level. So any retests in this area would be fair game for me to start bidding a little bit for the eventual recapture and run of this level, right? So looking very, very good on the Russell for that. Just keep an eye, guys, on the short-term time frames, right? Keep getting some hourly downtrends right there. You know that your daily consolidation is finished, but there's so much space. Anything above 217, just looking for a daily higher low for further trend continuation. And the weekly is looking good. If they close anything like this, guys, weekly uptrend is well in motion. So congrats to the bulls for breaking a very big level yesterday. Moving into lastly the Dow Jones. So the Dow Jones also consolidating after their big move. They get a new player in the index tomorrow. They get NVIDIA, right? And replacing Intel. So looking forward to see the impact that can possibly have in the Dow Jones, especially with NVIDIA earnings coming up soon. I mean, they won't hold the largest weight in the index because it's price weighted, right? NVIDIA stock is, about $140. The largest ones in that index are like Goldman Sachs and UNH and Caterpillar and John Deere, things like that, right? $400 or $500 stocks. So NVIDIA won't move it too much, but it will definitely help. That's for sure. Moving into the analysis. Analysis stays the same as yesterday, still just looking for a daily higher low for further trend continuation. Why is this important, guys? Why was this consolidation on the daily important? Daily downtrend and engulf. Well, now we know the weekly higher lows are set. The weekly bulls never lost this beautiful weekly uptrend right there. So now with the weekly higher lows set, weekly uptrend back in motion, we know the weekly higher lows are set. So any pullback at this point, guys, even if you lose the daily uptrend, even if you do a daily downtrend pattern like this, does not matter. Still just looking for a weekly higher low for further trend continuation. So the bulls remain in full absolute control. Where could we maybe come down? Possibly this location right there around the moving averages, right? I wouldn't say the absolute all-time highs is the line. I would more put it in line with the middle of this range, pull back a little bit more into the moving averages, something like that. So everything is looking quite good on the Dow Jones. Moving on into our analysis on big tech. We'll do crypto tomorrow. We did crypto every day of the week. Not much has changed. I mean, you can see Bitcoin chart. I'll not go over it for too long, but you can see we really haven't done much of anything right on the daily. So I'll do a full recap tomorrow with the trades, the expectations, all that. Moving into Apple coming alive today, right? 2.14%, and they needed it, right? They were kind of looking for this daily bounce underway, and the daily bounce is underway. Recapture of the hourly time frame. Hourly now looking quite good for some follow through. So now in terms of Apple, where do we stand on the daily? Well, it still is a daily downtrend. We are still battling with overhead resistance all the way up to about 230. We're in the midst of it right now, and also kind of battling with the moving averages too. So take a look at the size of this bounce, right? Size of the bounce is about 50%. Why does the size of the bounce matter, guys? Well, because if you only have a really shallow bounce like this in a daily downtrend, right? You're looking for the daily bounce is essentially just an elongated hourly uptrend, right? That'll let you know when the daily time frame is also about to roll over. When you lose the hourly time frame, right? That is the end of your daily bounce. So if you lose the hourly time frame and the daily's only gotten up to about 25%, you start rolling over, well, the odds of a follow through by the bears are quite high, right? But when we recapture 60, 70% of the move, 100% of the move, the odds of a recapture of the daily uptrend go in the favor of the bulls. So right now we're kind of even balanced, 50% retracement. So we'll keep an eye on Apple, not looking the worst. Obviously, we have big support below us, 220 down to about 215. This would be the area, if ever you're looking to write short puts, which I am not, but if ever you're super bullish on Apple and you don't mind, well, 219 out of 215 is a decent area. While this stock is consolidating, very, very tough to take a longer term position, right? Because we're not above a level looking for a breakout retest continuation. We're kind of just trapped. So this is one that I do like. Possibly exploring the possibility of writing some credit down here. Not looking too bad on Apple, but still arguably, if you look at the weekly, we're still arguably trapped between 230 and 215, right? Very, very big, tight range of accumulation since August. Moving into AMD, give me a very brief moment. So looking at AMD up 3.25%, finally coming alive off the bottom, guys. And this is where the size of the bounce matters again, right? So we know that the bears took control of this stock and brought us right down to support 140 down to about 125. Now, we were looking for the bounce. Now that the bounce is underway, we measure the size of the bounce, right? So if this was to be the last day of bounce for AMD, is this high enough, right? In the context of a sweeping big daily move down, right? The bears are arguably in short-term control. Is this enough of a bounce? Not yet, not convincing, right? Not even 38%. So if you roll over right away, the odds of retesting lows are very high right now. So that's why I say it's a very nice bounce, but not convincing enough yet. Need to get at least as high as 155 or maybe even 157. Challenge a little bit of this resistance zone, start filling a little bit of that earnings gap. Give me some room for the bulls to be able to set up for a new daily trend change. So we'll be on the watch for it. The bulls are also looking to protect the heck out of this weekly uptrend. We have not cut the lows. It is still technically a weekly uptrend. So we'll see what the bulls can do over the next 1 to 2 weeks, leading into NVIDIA earnings in the next 2 weeks as well. So the bulls looking good here, but if we do get a pullback, could be a nice little opportunity to write some premium down here, some short puts, or maybe if you are going for the daily trend change and weekly uptrend continuation, could be a good location, guys, maybe for some call debit spreads or a share swing trade, right? Just based off the weekly chart continuation at that point, your stop loss would be below here and you're targeting the upper end of the 175 for weekly. So there's a larger swing trade at hand here, definitely, which I do have a little bit of skin in myself. Moving into Amazon as well, 1.43% to the upside, looking very nice, guys. Daily uptrend, no secret there by Amazon, finally breaking above its 200 psychological barrier. I mean, new all-time highs for Amazon, right? Blasting past the all-time highs, weekly uptrend in full control by the bulls at this point in time. I'll be looking for a bit of the retest of the prior all-time highs around the 200, right? If we taper off and retest, this is a classic breakout, retest, and possibly run. Why would I be taking this buy right there at 200? Well, just simply, guys, we control all time frames right now. We control the weekly, so even a weekly pullback into next week, early next week, a little bit of a doji down here into 200, just going to be looking for weekly trend continuation. And I mean, I'm not even going to talk about the monthly. I think it's fairly obvious, right? What we're trying to do here on Amazon. We've consolidated for 5, 6, 7 months. So this leg, guys, is going to be a quite powerful leg. I would not be surprised if by the end of this monthly leg, leading into, November, December, January, and February, would not be surprised if Amazon can really tap the top end of the pricing power range, which is about 230 to 250. So that's the targets I'm looking for. So looking for that retest trade on Amazon, looking very, very, very juicy right now. Congratulations to all the bulls. Moving on to Google. Now, Google also recapturing most of the, what it had on earnings, gave back, and now recaptured, right? So a bit of a confusing one there, but it has always been a daily uptrend. Higher lows are set, and now we're looking at close above. If we can close the weekly above this zone, I will officially be able to turn this red rectangle into green. We have the beautiful weekly uptrend in motion right now. Look at this MACD. Weekly MACD, guys. Can't fade this one since July, right? Now, this is why I say the MACD is a trailing indicator. It is a final confirmation tool. If you have the weekly uptrend, strong weekly close, broke through a big level, you probably will get some continuation. It may not come right away. You may get a pullback first, but you might get some green momentum continuation through the month of December. And that's what I'm going to be looking for on Google, right? Looking very good. If for whatever reason we come back and back test this location, 175 to 170, I will be once again throwing some call options at it, writing some short puts, aggressively want to trail Google to the upside because the valuation is still cheap and they have not broken the all-time highs. I will remind you, the analyst price targets for Google right now are all sitting significantly into the $200 range. The average is about 210. So this one I still do remain. I still do maintain. It's probably one of the best deals in big tech right now. So I will be buying every single pullback. The weekly is looking good, and even the monthly, guys. We're just looking for another month of possible expansion here on the monthly timeframes. Moving into Meta. So Meta looking pretty good, right? 3.4%. They were really kind of left behind in yesterday's rally, but now are coming back nicely. So a little bit of choppy price action since the earnings. Kind of looks like Google, right? What we're trying to do here, guys, is recapture the daily uptrend. Need a break of the all-time highs to do that, which would be a break of 600. The clearer time frame, in my opinion, is the weekly. Look at this weekly, what we're trying to do. Weekly higher lows are set, looking for the weekly trend continuation up there. So Meta, guys, I think Meta is going for it in the next few weeks, right? Looking extremely strong, looking for that weekly continuation. So I would not be surprised if Meta really does start cracking into the 600s, maybe even all the way up to about 650 in the next maybe 1 to 2 months. Would not be out of the question. I mean, it would really paint the perfect picture of that weekly trend continuation. So Meta looking very clear for me right now, but in the event we give it all back and continue this downswing right there, guys, we'd still be looking for a weekly higher low. And if we could pull back any more, 540, I will be looking to buy some Meta down here to possibly ride that up a little bit further. I did not get in here. I'm in a lot of other plays, but I did not get Meta. It didn't come exactly into my zone. Perhaps me getting a little bit greedy because we only got about 20 bucks away, which I mean is about 3-4% away, but still the pattern is looking very good. Moving into Microsoft right now. So Microsoft also probably, in my humble opinion, one of the best deals in big tech right now, even though you couldn't really tell if you look at the PEG ratio alone and the free cash flow yield. The stock has been doing nothing, guys, for pretty much the past year since January. It is trailing the S&P 500 year to date, only up 13, almost 14%, which is why I think Microsoft November and December, guys, I think this one's going to fly, right? I really think this one is going to catch up to its peers and possibly try to push close to the all-time highs. The MACD, not there quite yet, guys, but as you can see, this is also since July. We're slowly looking to curl this one around. On the daily is looking quite good. Recaptured a lot of the earnings move, not quite filled the gap. We do still have overhead resistance, and it's a big one, guys. This resistance is no joke, right? So need to get through it. That's 435 down to about 425. Entering into it now. Why this is important, though, the size of the bounce as well. Size of the bounce now on Microsoft is very good, guys. Look at the size of this bounce. 618 has been achieved. So even if they cannot break it in the first clean shot, probably looking for the two-step recovery process of the daily uptrend. So if we do get rejected here, looking for a daily higher low for further trend continuation and any higher lows, I would be highly interested in playing some short puts. I'll remain, fairly aggressive on my short put writing on Microsoft down here, but I also wouldn't be opposed to adding, I have some call debit spreads that were bought back here and a leap call contract as well. I would not be opposed to adding more to those because I do believe over the next few weeks, possibly months as well, I do really think Microsoft is going to start pushing towards those all-time highs. Moving into Netflix right now. So Netflix also not looking too bad on the day, up about 4.2, up about 2%, guys. They're almost here, right? I was saying 800 is the psychological level of resistance. I do still maintain 800 is the psychological level of resistance. The daily bulls are in full control right now. Full upswing mode. If you want to know when this is going to be topped out, we'll just take our earlier lessons from the SPY. Look at the hourly time frames. Lose the hourly time frame, guys, and you'll be due for a little bit of daily consolidation. So until that happens, the bulls are in full control. And if we do consolidate, just looking for a higher low, anything at this point above 746 level, let's call it, looking for a higher low for further trend continuation. The level we could fall back into 765, right? Confluence with the 12 EMA, would not be surprised. On the higher time frames, nothing to see there as well. Beautiful, beautiful, beautiful weekly continuation by Netflix, looking excessively strong right now in the market. So I'm still a firm long-term shareholder for Netflix. Starting a new position up here, guys, I mean, it depends. If you're in this one for the next 5 to 10 years, and you want a DCA with every paycheck, nothing wrong with that. But starting a huge size position up here, probably not the best risk to reward. I wouldn't be too nervous, but I still think there's some deals that are better in the market right now. Moving into not financial advice, of course. Moving into NVIDIA. So NVIDIA smashing towards new all-time highs again, almost at the 150 psychological. And this one was a pure V shape, right? They had the daily downtrend. We know that while it was daily downtrending, I was telling you guys, right? Who is in control here? What does this daily downtrend mean? It just means that you're looking for a weekly higher low, right? This was always a weekly uptrend, and when they lose the tops and set the daily downtrend, you know you're going into weekly consolidation. And I was telling you guys, watch out for the 130, 126. We almost came down into it, and not quite, but reacted and then ran. So beautiful weekly continuation by NVIDIA. They have their earnings coming up on the 20th of November, 2 Wednesdays from now, so should be quite good. Expectations are high. In the event that NVIDIA pulls back a little bit, we are just looking for a higher low for further trend continuation, right? Anything above 132, looking for that follow through on NVIDIA, looking very, very, very solid, guys. No red flags whatsoever. And my favorite way to play this one is on any pullback. Going to be looking to write some short puts aggressively in the mid 130s to low 130s. Moving into Tesla right now. So Tesla was one that I did a ever so rare day trade on today as well. So Tesla was looking very good. They were looking for, this is yesterday into today, right? When we got this break above previous resistance on the morning, I went for the call options with about 1 week worth of time. We rode them very nicely and made some decent profits, about 25, 30%. So looking very good there on the trend continuation trades from Tesla. I'll talk about it more tomorrow. But essentially, we're dealing with the 300 psychological, right? And that's what we're kind of eyeing in the last few days, last few weeks, right? If they blasted through 265, 270, the next big contested area is definitely going to be that $300 mark. I mean, I could put a line on it if you want it to be more clear, right? So this is 307. It's somewhat of a range, right? 300, 310, you guys get the idea, right? 300's been challenging for Tesla, but so far so good. The bulls look like they're in full control. Daily getting slightly overbought right now. The hourly as well, slightly overbought, but still no loss of the hourly uptrend, right? Need to see a loss of the hourly uptrend if you want to know that daily consolidation is underway. So far, no sign of that. Can they smash through 300 tomorrow? Yes, but can they also get rejected there? Possibly. Just keep an eye on the hourly uptrend once again. I don't have a crystal ball, guys. The bulls look like they want to go for it, but if tomorrow's a red day in the market, you could get some pullback. If you get some pullback, look at this. Anything at this point, anything above 240, just going to be looking for a higher low for possible further trend continuation. So I'm a big fan right now of possibly writing some premium into the next few weeks. 270 down to about 260 could be a decent little level now that we've blasted through a very, very, very important level, guys. Now we're going to close the first, well, I mean, there's been one weekly candle close, right? You can argue two right here, but this one would be the most bullish weekly candle close above the 265 since July of last year. So looking good. Weekly's looking great for some continuation, which is why I say any pullback into 265, I do think could be a short-term buying opportunity for the stock. So that's the type of trade that I'll be looking for. And now lastly, Palantir. Palantir just doing what Palantir always does, is that any single dip that is ever had in the stock just gets bought up. So the bulls playing good defense down here, guys. Palantir up another 0.63% today. This one is gone. Home run trade for the bulls. Congratulations once again. And in the event that we do top out, because the RSI is slightly elevated, the valuation as well is slightly elevated. And I'm telling you guys this as a Palantir shareholder that I have shares from the $11 range, guys. So trust me. Trust me. You can trust me at least when I tell you that the valuation of Palantir is high right now. I have skin in the game. We did it at 46. The stock is now from 46. What is that? Like 20% higher? So add 20% to this. The PEG ratio is like a 5.5 right now, guys. It is quite elevated, right? That being said, the bulls are still in absolute full control. I wouldn't be starting a position up here, not financial advice. But covered calls, taking a little bit of shares off, taking some profits and maybe waiting for a little bit of a dip, consolidation period is not such a bad thing for Palantir, right? So the bulls are in full control. Once that consolidation happens, you guys know the drill. Just look for a consecutive loss of the hourly time frame. So far, they could not close an hourly downtrend, right? The bulls played great defense, and now we got another push. So if we do lose the hourly time frame and loss of the 12 EMA, which is your short-term guide, you will have your daily pullback. And then we will be looking for a higher low, anything above 41, looking for the higher low. The weekly, guys, the weekly is gone at this point, right? Even if we get a daily downtrend for weeks of consolidation on Palantir, it's just going to be looking for a weekly higher low. Anything above 41, just going to be looking for that higher low for further trend continuation potentially, right? So Palantir looking very good. Congratulations to all you Palantir shareholders out there once again. So that's pretty much everything I had for you guys today. Hopefully you guys enjoyed that one. If you did, consider dropping a like on the video. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new, guys. Would love to have you back here. We do these videos every Monday through Friday after the close. And lastly, if you have any questions, please leave them down below in the comments, guys. Anything you want, I'll be sure to answer down below, usually in the first 24 hours. And in the event you want all of these juicy trades, because I don't only do the indexes and big tech such as I do in the videos, I do a ton more. So if you want all of these trades, these were last week's trades. These are all the trades since I started the Discord. All the green check marks are the wins. The slight little red circles are the tiny losses, and the targets are the assignments, which we usually always get out of at a profit as well. So we've been doing very good, made a lot of money this week as well. I'll update this tracker tomorrow. If you're interested in the Discord, getting all these trades in real time, the link is down below in the description. We also do private live streams every morning for about an hour. You get all my trade setups, shares, call options, wheel trades, stuff like that. You can chat with me all day, ask me any and all questions on your stocks and your options, and I will be there to help you out, whether you're a beginner, you have 5K, 10K in your account, or you are seasoned, you have 500K, a million. I do it for absolutely everybody. There's something for everybody in there. So if you're interested, the link's down below. And if not, I will see you back on the channel in another one of these videos sometime soon. I'll see you tomorrow after the close. Take care. Wrap it up strong, guys. Been a great week so far. Take care. Peace.